All right, so the topic of the third panel is tokenized equity. We've kind of touched on this a couple of times during the previous conversations, how this has been something that's been a little bit slow to develop in the tokenized security markets. Maybe we can start off with very, very brief introductions, and then we'll jump into the topic at hand. Evgenia, do you mind starting with a very brief introduction?
I will start with the introduction to Kazakhstan, basically. Not many of you maybe heard about Kazakhstan. So Kazakhstan strategically located in the heart of Eurasian continent, connecting Europe on the west and Asia on the east. It has 20 million population with positive demographic, which is not a common pattern. And it has 2.7 million square kilometers of land, rich with minerals, oil and gas. And the key contributing industries is oil and gas and metal and mining. And basically we have quite good assets already publicly traded on local exchanges and international exchanges. We have Kazmunay Gas, which is national oil and gas company, and as you know, Kazakhstan is not OPEC member, but it participates in OPEC Plus, so it's quite significant production of oil and gas. Then we have Kazatomprom, which is the world's second largest uranium producer, and two another public issuers, ferroalloy and Jaksin, which are rare metals producer, vanadium and tungsten. And Solidcore is a top 5 gold producer. A couple of fintech companies, so there are really good assets which are already publicly available. And there is a privatization program for a couple of others, like a gas producer, natural gas producer, and National Railroad. So it's quite interesting assets in Kazakhstan to invest. And Kazakhstan created a special zone called Astana International Financial Center. It's a common law jurisdiction with independent court. So basically that is the entry point for foreign investors into jurisdiction. And we offer like traditional infrastructure for traditional capital markets, and we do offer also fintech structures, and Bitfinex is one of our residents, which is licensed as security token exchange, and Bitfinex has signed MOU with our traditional investment exchange, Astana International Exchange, which allows like full fungibility between traditional and tokenized markets.
That's very good, thank you.
Yeah. Okay.
Gabor, quick introduction.
Sure. Hi everyone, my name is Gabor Gurbac. I oversee strategy at Tether. I'm also the CEO of Hadron by Tether, which is Tether's tokenization platform. We have around 1,200 businesses who sign up to tokenize all kinds of assets with us, from commodities to bonds to equities and so on. And Bitfinex Securities is Tether's sister company. So we have a very good relationship of Hadron being the tokenization platform, and Bitfinex Securities being the registered exchange and distribution platform for issuers that decide to pursue new capital markets. And yeah, my background is in finance. I spent about 15 years on Wall Street. One of the first guys racing with the Winklevoss brothers to get a Bitcoin ETF to market. Launched some of the first ETPs in Europe, and originally Hungarian, live in the US now, and yeah, excited about tokenization. The world has around $700 trillion in assets. About $30 trillion will be tokenized according to the top 3 consultants by 2030, which is not far from now. And what happens is, just very quickly, is first we had stocks and bonds, and then pooled investment vehicles like hedge funds came along, then mutual funds and ETFs. And what's next is tokenized assets, so that's what we are working on. each of these asset classes created multi-10 trillion dollars in value, and excited to work on that.
Patrick?
Hey, Patrick Murphy from 8cap. I'm the Chief Operating Officer there. We're a retail derivatives broker, so probably more from the TradFi space, but probably a product that was almost an early version of tokenizing an asset, more tokenizing the price. So CFDs allow you to trade any underlying asset, and then they just represent the value of the price of the asset, and you can go long or short with leverage. So there is actually, some firms like Robinhood that are using a similar product at the moment to offer their stock tokens. So it's been around since the 70s or 80s, but it became a lot more popular in the 2000s. So we're definitely watching this space closely as a trading platform, always wanting more things to be available on our platform to trade, whether it's private markets or tokenized stocks as well.
Arnab?
Thanks, Jesse. My name is Arnab Naskar. I'm the co-founder and co-CEO of Stocker. Stocker is an asset tokenization platform. We started quite early in 2018. Primary focus for Stocker is providing the full end-to-end solution for any kind of asset issuers, asset managers, fund managers, and provide them in the full life cycle. That means providing them the tech, the compliance support, the regulatory umbrellas, any kind of other strategic support in terms of introductions to our investor base, but also working closely with Bitfinex Securities to getting those products listed on Bitfinex Securities for trading. One of the interesting products that we started working with Bitfinex Securities, which was actually the first product, was a hash rate backed securities, Bitcoin mining hash rate backed securities. The first iteration paid out in 2024, around 80 million in Bitcoin, and that product we launched BMN2, the block stream mining bond. The current size is around closer to 1 billion AUM. Stocker, we at the moment are managing over 1.8 billion worth of assets under our infrastructure. And one of the key KPI that Stocker follows is how much we pay back, right? Every platform talks about how much they have raised. We are quite proud in that direction to say that we have paid out over 250 million worth of return to the investors till date, and is growing. Every quarterly we are paying some larger ticket sizes to our investors. Stocker is based in Europe. We are licensed in Luxembourg as a VASP, the Virtual Asset Service Provider. In the process of getting the MiCA license, we have also some very strategic partnership with broker-dealer players in Germany and likes of that. We are quite bullish in Bitcoin market and Bitcoin as an infrastructure, effectively, because the fundamental thesis in which Stocker operates is Bitcoin is a 2 trillion asset class. A few hundred billion worth of derivatives and structured products can be built on top of it, and this can natively be tokenized. And Bitcoin is a very interesting asset. If you see this way, it has a interaction of energy, data center, power, a lot of these factors, and you can create a number of interesting products which cannot survive in traditional market. So we are very much keen to bring those products. We also started looking in tokenizing MicroStrategy and Bitcoin treasury companies, and we enable them trading against the BTC pair. So because imagine if it's a MicroStrategy, there is a volatility of Bitcoin over the weekend, but in traditional platform, you cannot trade over the weekend where the Bitcoin is volatile. So we enabled it in tokenized format where people can go to the platforms like SideSwap, trade against the BTC pair, and we have seen the volume are actually much more higher after trading hours. So it's a very interesting learning that we have. And we are also kind of distributing a lot of fixed income products. So happy to share some thoughts and understanding about how it developed and also to contribute to the panel. Thank you.
That's great. And following up on Paulo's kind of, his vision for how this would develop, he mentioned in the first panel about being able to help small companies all over the world raise capital and issue equity. But the way the industry has developed doesn't really look like that right now. It's mostly dominated by fixed income products. And one of the common criticisms I get, mostly from reporters, is that the trading on tokenized security platforms is relatively thin, which is a fair observation. I think partly because we have so many of these buy and hold type products, which the BMN is another buy and hold type product. Why is there this skew towards fixed income type products? And do you agree with kind of my analysis as that is why we have kind of lower liquidity on the securities platforms? Arnab, Gabor, anyone who's got a thought on it.
Okay, so like the learning that we have at the moment, you're correct. Like we see a lot of demand in the fixed income products, and that's partly because of stable coin. And that's a good thing, because if you have a stable coin like USDT you are holding, you are not natively generating any yield. You can put the money in a DeFi speculative vault. Congrats, do it and burn your money. But there are also other ways you can actually earn, and there are some fixed income products. Like we have launched some fixed income products that is providing a high yield, mid-teens return around 15 to 18% range, and a lot of hedge funds are subscribing to this product, which is collateralized and over-collateralized by BMN and Bitcoin kind of products. So there I see definitely the demand, because that's easy for them to understand. And also one interesting thing, if it's a fixed income product providing a quarterly payout, they don't immediately require to trade it, because there is some return. So that's, I would say, starting point. But definitely we need a lot of other infrastructures to be there before we get stocks and private equity stocks effectively at a larger scale to be traded.
Gabor, what are your thoughts on that? How do we get more liquidity into the industry?
Yeah, definitely. So I think one of the key discussion points today is that the type of investor who is engaged in this space, so the bond buyers and the fixed income buyers are usually institutions and or family offices that are larger, and retail is not participating in meaningful ways today, and that's for two reasons. One is investor qualification laws. It just hampers investors from participating in the market, so that is being revamped. And sort of a corollary to that is the existence of markets like Bitfinex Securities are relatively new. While Bitfinex Securities and Stalker are one of the oldest ones, the space is relatively new, so retail is not participating. So I think one of the things that you'll see coming in the US is the lowering of investor qualification to participate in products like tokenized products. And obviously Kazakhstan is sort of leading the way and have licensed entities like Bitfinex Securities, but I think investor qualifications need to change in order to see more equities-like products. The other, on the PE side, we have seen companies like Robinhood, for instance, to tokenize sexy names like SpaceX, but their trading volume is nominal in those, and that's mostly signed up institutions already. So, but I think we'll see some of those products popping up soon as more exchanges are getting licenses and retail trading ramps up on licensed platforms.
What are your thoughts on that, Patrick? I think CFD platforms are a generation ahead of us, and you've had a lot of experience on how to build up liquidity. What do you see as kind of the reason in the security token market for the relative lack of liquidity, and how have you addressed that in your business?
Yeah, so I think just in terms of stocks and people trading stocks, CFDs maybe as an early precursor. Stocks are always traded, around IPOs or certain events. They're not as much continuously traded as other assets on our platform. And in terms of liquidity, I think that obviously takes time because of all the participants, whether it's the investors, the access to the product, liquidity providers, market makers. These kind of took time, making sure that the platforms are all kind of connected and you can have different partners rather than trying to do everything yourself. I think some others have spoken about that in terms of everyone having different roles, whether it's the liquidity provider or the bridge or the investors. So I think that'll develop as it has in the crypto market. CFDs were probably one of the precursors for perps, which now we're seeing have developed into an extremely mature product. And I think that'll happen, as tokenized equities grow and there's more on platform.
Evgeny, what are your thoughts on Gabor's comment about accreditation and having professional investor designations? Because I think what happens sometimes is you get a situation where the people that want to invest can't, and the people that can invest don't care, right? So what are your thoughts on that, about lowering those kind of qualifications or making it easier for the average investor to invest in some of these types of products?
But I think investor base in Kazakhstan is quite specific. What we observed that I think it's more than 90% is retail trading on the secondary market is quite active, especially as I said, that there are some Kazakhstani blue chips which are quite actively trading on the secondary market. And there is a potential, I think, for tokenization, because it is a new distribution channel, but it's also the way how we can get new, unique investors on the market. And as I said, Kazakhstan is growing in terms of population quite quickly, so it means that there is emerging a new type of investors, Generation Z. And that generation basically wants to invest through applications, through wallets, through blockchain. They don't go to traditional brokers. So I think we can redirect part of the liquidity of that secondary market liquidity from traditional markets to tokenized markets, and we are working on that. And basically the good thing that there is already infrastructure in place, and that fungibility basically works. It can flow from digital market to traditional and vice versa because of your integration with the traditional exchange. So I see the potential here. And of course, new IPOs, we will suggest the government to use that channel for distribution to reach out to new type of investors. And yeah, Generation Z is quite active in Kazakhstan.
Yeah, I think that's very exciting, the idea of doing direct tokenized IPOs. Gabor Apollo, in the earlier panel, he mentioned that he was blown away about the demand on the Hadron side. So good work, number one. And number two, what are are you seeing more interested in tokenized equity, or is it still more of what Arnab mentioned, this kind of skew towards fixed income?
Arnab is correct. It's more fixed income right now. And again, I think the issuers that are coming to market are, yield is an important component. Yeah, I think about 20% of our demand is coming from to tokenize equities, and it's guys who want to tokenize their startup. And again, it will just take some time. And the investor qualification piece is so important. Again, institutions are looking for yield. Institutions are the biggest buyers right now of tokenized instruments, and particularly hedge funds. And we just need to lower qualifications to get to market. Now, the other piece, commodities are also getting interest, and also non-traditional assets, like intellectual property, loyalty, and so on. So those are just some interesting areas that haven't been securitized before. And eventually, I think some of those non-traditional assets, which are about 30% of our demand among these 1,200 users, will be put into some sort of equity instrument as a bundled product akin to ETFs of sorts. And yeah, so that's, again, my thought is we just need to work on these qualifications with focus to get more equity investors.
Adam kind of mentioned how one of the benefits of tokenized Bitcoin treasury companies is that you could trade them 24/7, you could trade them anywhere in the world. It strikes me as that that's very similar to a depository receipt model, like GDRs or ADRs. How close do you think we are, either anyone who has a thought on this, are there any public companies that are looking at this as like an ADR or GDR model where they're like, we want to issue a tokenized shares so that we can get access to global investors? Have you any conversations like that, or how far away do you think we are from seeing that kind of interest?
So the reason how we started tokenizing stocks is actually, I was not super keen on tokenizing public equity stocks for a long time, right? And then the treasury company started coming in.
We saw that fail at FTX, right? That failed at FTX
Exactly.
before FTX failed themselves.
Exactly. So the FTX did, I think Binance also played for some months before that time. I think it's not a new concept, right? And people thought, okay, you can bring the same level of speculation and all these kind of things from the traditional market into the crypto market, and the exchanges may require that kind of assets. But what we were always questioning is why somebody would like to buy it. Like, the tokenization should be for a reason, right? And one of the biggest challenges when you tokenize securities, like much more the public assets, you are not giving them the pure equity in a tokenized format. It's a wrapped version, right? So you're actually increasing some counterparty risk. So you cannot deny the fact, right? And this is what, at the moment, the current format is. In very few places, you can actually natively tokenize an equity instrument. Regulators are not very, sorry to say that, but they're not very open because they consider equity is a very high-risk retail product, so they don't want tokenized equity. They're much more theoretically want tokenized debt product, but it's fundamentally it's the same. But yeah, there is some thoughts that debt is more secure than equity. So when we looked into that in 2022 is the Bitcoin treasury companies, they became an interesting use case. The use case is most of the Bitcoin treasury companies were discussing about BTC per share. Now, in traditional market, you cannot trade MicroStrategy against the Bitcoin.
Sure.
But if you're talking about the BTC per share, there's a different trading angle. There's a different alpha you can generate when you're trading against a Bitcoin. And that traditional market cannot activate right now. And then we say, okay, that's an interesting angle where we can go in. So we looked into that. Now I'm quite keen to see how the strike and strife, all this kind of perps can come in, because a lot of things can be done. But where the market need to always seize, and any participant that is coming, is what is the edge that we have in tokenized format compared to the traditional market. And if there is an edge, then we can talk about larger AUM growth effectively.
I think we are talking about different types of issues. So if we are talking about like startups going IPO, of course, the risks are high, but we are talking about stable, mature issues with good dividend stories. So, and we are very keen on tokenizing those, like mature with good dividend stories, not like startups.
Yeah, I think on that point, because you brought up FTX, that model was actually effectively like an OTC derivative that they had back in 2020. And I think with the public markets, with the exchanges not actually putting the public markets on a blockchain, all of the tokenization at the moment on public markets is kind of complicated and creating more centralization than actually legal ownership on a blockchain. So it's going to be harder to do that with public markets until regulators or the actual exchange is involved in it. So I think there's probably more of an opportunity in private markets, some of the things that obviously Bitfinex Securities are doing with fixed income, but also with private markets, you can actually put the legal ownership on a blockchain. So I think that's going to be probably where there's a greater advancement first.
One of the problems I think with the FTX approach, if I remember it correctly, is that you could only trade it, Monday to Friday in normal trading hours, right? So it didn't really achieve kind of the effects that we're used to as Bitcoiners, to be able to trade 24/7, 365 with real-time settlement. So I think that's an important thing to do. Maybe you have thoughts on this as well, but how do you address that mismatch where you've got the underlying trading on fixed hours and then you've got the tokenized version kind of trading wild on Bitfinex Securities?
Yeah, I mean, maybe just touch on it a little bit. So I think someone like Xstocks or Backed Finance is having that issue at the moment because it's all centralized at one custodian and everyone's just wanting to buy. Yeah. So they actually have to manage that risk themselves because they've centralized the ownership of the stocks. So if you're trying to offer 24/7 stocks and they're not actually available 24/7, then someone's going to have to manage that risk over the weekend or overnight. So I think it's going to be different market makers or liquidity providers that are actually managing that risk in between hours if you want to offer it when it's not actually available on the exchange.
Part of the solution is also just get more native listed assets on newly registered securities exchanges, because then that builds up inventory and market maker interest, and that creates liquidity. But generally also what hasn't happened, this is what we've, one of the reasons Hadron exists is because we wanted people from mostly emerging markets countries to be able to raise money in a Tether token basis. So we just sort of created the, there are ADRs and GDRs, the American Depository Receipts and Global Depository Receipts, and we have internally, we call these the TDRs, or the Token Depository Receipts, or Tether Depository Receipts. So right now when you raise with Bitfinex Securities and use Hadron, you can denominate your raise in USDT. So that structure didn't exist before. And it's a very small market now. So in my previous career, I managed the largest gold miner fund, the largest Russia fund, largest Vietnam, India, and Brazil, and a few other country funds. It was almost exclusively ADRs and GDRs issued by banks to access markets. And right now, the banks are not issuing those papers in stablecoin terms, so there's no cross liquidity in the same way. So we'll see a version of banks getting involved, or companies like Tether or other companies sort of playing a similar role in the future to create that sort of liquidity. But again, the cross stablecoin and cross liquid assets, depository receipts just don't exist at a meaningful size. I think that's a problem. But yeah, the other piece is the business model doesn't really fully exist to make money on this. GDRs and ADRs are extremely expensive, and banks are motivated to issue them, and we're extremely efficient in our issuances at Tether and services. So that's another incentive mechanism sort of development that needs to take place before liquidity picks up.
All right, we're running a little bit behind, so maybe I'll wrap this up with one quick question, then open it to the audience. The final question is, like, looking out 5 years, what do you think the asset split looks in the STO RWA market in terms of different asset classes? Which ones are the more dominant? Does it change what we have from today? And Evgenia, maybe for you, is what is the opportunity in AIFC and for Kazakhstan more broadly? Do you think it's for tokenized equity? Is it for tokenized bonds? Where do you see the opportunity? Or maybe for across the whole region?
I think with government support, the tokenization, both like securities, real world assets, could be quite high, like 30% or even more. Can't comment on split between the asset classes. And just to comment on the national strategy, basically the president announced national strategy Digital Kazakhstan, so the economy is being modernized to implement AI tools, blockchain, and IT technology. So there is a strong support from the government, and I think it's quite big potential for tokenization in Kazakhstan, and AIFC offers the infrastructure and framework for that.
I think so, and I think that's one thing that's very unique about the AIFC in Kazakhstan and also El Salvador is the degree of top-down support. Gabor, how do you see this split playing out over the next couple of years?
I see a lot of real estate coming online. There's $280 trillion in real estate, otherwise a liquid market. So that's going to be interesting, and most of the developments are happening actually in the Middle East. And then the other emerging categories, already existing products getting tokenized from the markets, so that's going to be another big area. But I think it will resemble the traditional markets with, that's my bet. So we'll see predominantly fixed income dominating for the next 5 years. Real estate will be second, and then equities third. And then some interesting application. I mentioned loyalty and intellectual property making 5% of the market or something like that.
So millennials actually have an opportunity to buy a house. Maybe not 100%, but they could buy 0.00001% of a house.
Yeah, so you can stay at the house 2 days a year, and that's fine.
Patrick, what do you think?
Yeah, I mean, just in terms of the equities, I think, as I said before, I think private equities would probably be first in the ability that they can actually be tokenized at the moment, where it's going to take a bit of time, regulation and exchanges to actually put ownership on blockchain. So I think there is an opportunity, to see hundreds or thousands of private companies on Bitfinex Securities and creating a market for that. And I think, Paolo mentioned that obviously there's a lot of the work that can be done in emerging markets in their kind of building of companies. But I think even working at 8Cap, a small to medium-sized business, it is very hard to raise funds when you're running another business, your main core business. So I think there's a lot of opportunities in tier one markets for that, that middle tier that's private companies. So private equities, I think, could definitely move forward first.
Arnab, your thoughts?
Yeah, I think right now if you see the treasury bill market is the biggest in terms of tokenized RWA, and I think it will, for a long time, it will, in that size, I would say it will still be the dominant market leader in the space. And I think where I see a lot of innovation is happening also in that direction. A lot of asset managers are looking into hourly yield issuances from those money market funds, and that's where they can solve the intraday liquidity problem, and that can massively grow in volume. The second where I see is still the private credit. Energy infrastructure is something like that can definitely, because every crypto investors effectively understand the value of energy infrastructure. It goes hands in hand, and that can provide a sustainable return for a longer duration, not just 1 year, 6 months return, but a longer duration. I think there is some good room to grow. The private equity pre-IPO companies, there is some room, but the challenge always comes in distribution, explanation, and roadshows. And that's always have a local distribution channel, how strong it is, and all these things, and education. So this education takes a long time. This is something our learning also effectively. Yeah, so the low-hanging fruits are those larger, and also the AUM, right? It's very important it's easier to distribute a product, a larger AUM with $1 billion AUM than with a 10 million ticket size. Effort is the same, but the challenge is explaining, educating, and all these things, and all the machineries that you have to pull. It's very hard in that sense. So that's kind of the learning. So it's much more, and then you also don't get the liquidity, right? If a product has a 50 million AUM, they will not have a liquidity on the exchange, so they cannot fundamentally get the benefit of tokenization.
Maybe we'll open it up to just one question, one final question, then we'll move on to the last panel.
All right, I have a question. I mean, the stack is complete. No? You have the cash flows on USDT, you have the tokenization engine Hadron, and you have the secondary venue Bitfinex. I'm an old investment banker from Merrill Lynch, and servicing the cash flows to the shares or to the real estate, I'm a real estate investment banker, was the tricky part. No? So is there a product in the planning where cash flow servicing plus ownership in a token comes in a bundle?
I don't think I can talk about it just yet, but maybe there is.
Thank you very much.